Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, what's going on? This is Dave from SST, and I'm going to do a breakdown on one of the SST Scalper Pro signals that we sent on Friday. It was on NASDAQ. It was a buy alert out of a 15-minute demand zone, and you can see this was the setup. Right to the left, guys, you can see a nice sell area. Okay, we had the alert go on. We missed this, all right? Then you can see we made a nice little bottom here and found one at roughly 12,595, okay? And, this is to the left, guys, a 15-minute demand zone, okay, higher time frame, where there's been previous level buyers just sitting there waiting to have their pending orders triggered, all right? And you can see in previous history, guys, there was some nice volume stepping in here for at least maybe 180 to 100 points, okay, for a nice little continuation buy. And you can see we consolidated, all right? And then this is where the trade kind of was sent. We figured that there's a high probability setup that if we get back down into this general area right there, that you will have some pending orders triggered and the buyers would step in, and they actually did, and the trade played out pretty nicely. You can see here that the trade ran for roughly 150 pips. Okay, it's definitely something that we mentioned as a high probability trade. It did play out. You'll see these types of setups many times in the markets, and it's all based out of supply and demand, okay, where the pending orders are sitting waiting to be triggered, as I mentioned now for the third time. They did play out here in this trade. So I want to break this down for you, doing it play by play, like some back testing, and show you guys why we looked to take this and why it ended up being a high probability trade that hit some targets. Okay, so let's head over here, guys. You can see that this was the trade. Okay, all right, this is how we sent it to Discord. High risk, 12,611 was the entry, okay, which is this white line right here. All right, TP was roughly 12,750, which is right around previous level structure. Okay, and you can see the stop loss was just below the previous level wicks. Okay, and right around this buy area, just because we didn't want price to break down here and break that support level and then continue in making a lower low. Okay, so guys, let's set this up here. All right, let's do some back testing real quick. Okay, ignore all that as we dive in here. Okay, you can see that there's a lot of wicks, okay, being supported at this 12611 area, and even to the left. All right, you have some nice structure support, and it's all because the buyers have stepped in and they've started to take the bid price and raise it. And the institutions probably were stepping in here trying to push price higher. Okay, you can see there's a lot of resistance forming at that 12,750, which was the TP. All right, so if we go forward here, you can see the next level candle, another support. Okay, and this is where you can see they made a nice retest again, another wick. Okay, price was looking bearish, could have head faked some traders into breaking structure. And then finally, guys, as you can see here, we're now retesting this again. And this was the candle that, made us realize that if they're going to hold here, all right, this would be a nice opportunity to get some demand level in here. All right. And that's when we started to chart roughly this. Okay. And, we sent this trade at around 3:15 p.m. Eastern Standard Time. All right. And if we mark this on the chart, okay, so let's put it as a long position. Let's just enter in what we have to the left here. Okay, so 12611, all right, as the entry, and then the TP was 12750. Okay, and then we have our stop loss at 12550. Okay, this is pretty good risk to reward trade setup. Okay, you're really only risking, I would say, maybe around 63 points on the 15-minute time frame. So obviously, when we say high risk, it's because the stop loss is a little wider than normal. All right, but remember, on the 15-minute, you should lower your lot sizes and be able to widen your stop loss without having any issues if you understand how to use proper risk. Okay, so and then we looked at the TP, guys. Remember, at around 100, 140, 150 points. Okay, right to the top of that previous level resistance structure. Okay, so let me just mark that on one more time. Right around in here. Okay, so this is the trade setup, 315. Okay, you can see here that price is starting to make a dip into the buying area, and you can see that the buyers are stepping in. Okay, and if we continue this and you entered in around this area, which is right close to our entry point, you can see that price made a nice little impulsive push. Okay, that's because the volume is still there, all right, from the previous level where the buyers pending orders were triggered, and you can see that they were fully loading this area, and you can see the ignited candle that started to happen. So right off the bat, guys, in about total of maybe an hour, that trade ran for almost 62 pips. Okay, and a lot of people maybe took some profit there, all right, but again, the volume is still around. Okay, and we do see that in this area to the left now we've made another resistance point. Okay, roughly around 12,700, 12,690. Okay, and so let's see kind of what happened here. So if you're in this trade, you're probably monitoring the entry point. You're really happy that you made some pips if you took it. Okay, then the next candle, all right, reversed and pushed right back down to entry. So guys, at this point, there'd be a lot of people who were probably securing some profit here. All right, now this gives you a great opportunity for an entry point again, okay, at the same price, because this is your retest. Okay, so we broke. Here's your retest. There's resistance here. We're always going to test or retest some key levels in the markets. All right, especially where there's a high volume pending orders. Okay, then you can see, guys, we go right back into drawdown. All right, and instantly the buyers are holding it again at that 12,611 area. Okay, and then next you can see we're retesting and the volume is still holding bullish. Okay, and let's see how this is going to play out. So they're starting to make a little bit of a high, okay, based on the previous level structure, and price is rejecting, but we're not breaking down below our entry point. Okay, so this is a trade there. Hold your stop loss below some demand. That way, if it does break down here, guys, it's continuing the lower low. You either take a break even hit, or you let the full trade run out to what it was set up as. Okay. Then finally, you can see buyers are really stepping in here. There's a lot of head fakes pushing price down, but we're still holding this area. Okay. And then you can see we're starting to rise. All right. Very consolidated, low volume Friday. Okay. So it took a little bit for this trade to hit. All right. But remember, guys, on the 15-minute trades are not always going to hit your targets within the first, 2 candles. All right. It might take some time. That's why you have proper risk to reward, and you're not, hovering around the trade like you're watching it every 5 seconds. Okay. You give it some room to breathe, and you can let this 15-minute candles play out nice. Okay. And if you just let it play out, guys, you can see you're starting to make some higher highs. Okay. And, it's very slow, but this is the type of volume that's nice. The erratic volume, like up and down, intro, outro movement, that's not always the best to trade. It's a lot of stress and anxiety. All right. This type of stuff of intraday trading is perfect, because you can see that if you just let this trade play out, okay, you'd be heavily in the green. All right. At this point, you're running about, I would say, around 100 points, 100 pips. Okay. At this point, guys, you could do one or two things here. You could start to trail your stop loss. Okay. Maybe at previous level structure, roughly at maybe 12,700. You could move your stop loss to break even. Okay. Which would give you a risk-free trade. All right. And there's a couple other things you could do. You could secure 75, 80%, leave a runner. All right. Or you could just let this trade completely play out and see how it goes. And if you did, you can see that made nice highs, and the volume is still holding bullish, finally hitting some TP, and then almost a little bit beyond. So the trade total ran for around 150 pips. It was a nice risk to reward ratio. Sorry, guys. And yeah, that was all based on, supply and demand. You can see there's a nice sell level here. As I showed you in the previous chart, we do have a supply area. Okay, so I guarantee it in the weeks to come, when we get up to 12,850, price is going to either break through with a large volume based candle, okay, or they're going to get some rejection, all right, in and around this area, and price is going to reverse back down and maybe tap our 12,775, 12,770 area, and maybe look for a bounce or the continuous breakdown back into our demand. All right. So, guys, that's the type of trade setups that we give. It's based on our SST Scalper Pro, but also we utilize, I guess you could say, supply and demand areas, which are the most important parts to trading. And if you guys follow these, like I said, you could easily gain 15, 20, and then if you understand risk, a lot more potential pips, like, maybe 30, 40 plus if you trail your stop or move your stop loss to break even. And we've been hitting quite a few of these in the group this past week. I think we only took one loss, and a couple break-even hits for sure, and that just is being risk-minded. But yeah, guys, so I won't keep you any longer. If you like this trade, guys, hit the like and subscribe button, and we look forward to doing more of these breakdowns for you, so you can see what we're doing in our private room. But also, guys, we do have some trades that we've shown live and that I have done personally during market open on the Dow Jones, some gold, NASDAQ. So if you guys like what you can see here, like I said, subscribe, but also check out our website, join up with the team, and we trade all varieties, EU, GU, GJ. We do commodities, gold, silver, and then we do our indices like Dow and NASDAQ. So that's about it, guys. I appreciate you tuning in here, spending a little bit of time with me. I hope you enjoyed the video, and we will continue with doing more of these breakdowns so you can see what SST is doing live. All right. Have a good one, guys. Later.